Dude, what is going on with the metals market, man? Gold's crashing, silver's down over $2 an ounce. Bro, what's going on? I mean, the stuff I just bought last week, I'm down by $2. I mean, should I sell now? Is this bull run over? Bro, what is going on? All right, and welcome back to Unobtainium CNC, and we're going to tackle that question right now. Is the gold and silver market hit its peak? I don't think so, and I got a few reasons why I think that we're just going up and up from here, and this bull run has just started. So let's head over here. We're going to go to livemint.com. It says gold heads for weekly loss, drops over 2% on strong U.S. jobs report. Silver sheds 6%. Gold prices are headed for another weekly loss after a stronger than expected U.S. jobs report doused expectations for U.S. interest rate cuts this year, adding to the bearish sentiment driven by data showing that top consumer China held off on bullion purchases in May. The yellow metal has been declining for the last 3 weeks over diminished rate cut expectations by the U.S. central bank. Spot gold dipped 2.7% to $23.12 per ounce. U.S. gold futures dropped 2.5% to $23.30. Caught in the slipstream, silver shed 5.8% to $29.50 per ounce. Platinum fell over 3% at $972, and palladium lost 2.8% to $904. Coming to domestic prices, gold futures last traded 0.2% lower at 71,341 rupee per 10 grams on the multi-commodity exchange. Now, what you're seeing here is a pretty good sized dip, and a lot of people are freaking out. You can go all over Twitter X, and everyone's like, "Oh my God, what's going on with the market? What's happening with silver, gold? Is this the end of the run?" And I can tell you almost without a doubt that this is not the case. And there's a few things I can point out that tell me another story. Let's go over here to this next report here, and this is coming from Kitco News. Over 100 tons of gold have been moved from the United Kingdom to the Reserve Bank of India's vaults in one of the most ambitious transfers of the precious metal ever undertaken. And that amount could double in the coming months, according to the report from Times of India published Friday. Up until now, over half of RBI's gold reserves were held in the Bank of England and the Bank of International Settlements, BIS, overseas, but Indian government has begun the process of repatriating the country's bullion holdings. Now, why do you think they're doing that? I can tell you why they're doing it is because they don't trust these other banks, these other countries to hold their valuable assets. Remember, gold in your possession has no counterparty risk, but if you hold it in someone else's vaults or in someone else's bank, they can do whatever they want with it. And if we go to war, well, guess what? You're not seeing your gold. India knows that. And there's a whole bunch of other countries that know that as well. We can go over here to this next article here, and this says, for countries repatriating gold amid geopolitical tensions. Now, this one's from March, but the story remains the same. As geopolitical tensions rise around the globe, capital markets are seeing a repatriation of gold, and the precious metals price continues to climb. So investors may also want to keep the metal close to home in their respective portfolios. Once again, in your possession, no counterparty risk. You need to hold your own metals in your own possession. If you're sitting on a gold trust or you have something in a gold IRA, yeah, you might get paid out in that. You might not. Once again, it really depends on what happens down the road and what kind of political tensions we see. And frankly, if, in my opinion, I don't want to leave that risk to someone else. I would rather take the risk on for myself and have my metals in my own possession. It continues on. You're seeing a move from west to east, where historically speaking, a lot of Western countries have been countries where gold was stored. And this is now changing because of what happened with Russia and Ukraine, and the U.S. imposing sanctions on Russia. Now, when U.S. did that to Russia, I mean, basically all the other countries of the world took notice, and they took notice because they said to themselves, hey, if they're willing to do this to Russia, a nuclear country, then if we become out of favor with them, what are they going to do to us? Well, this is really what started this chain and the BRICS nations getting together and looking to basically get away from the U.S. dollar hegemony. But Jay, you say, hey, there's nothing wrong. Look, the stock market, S&P 500 closed at a record high. Oh my gosh, we're killing it. Yeah, look how happy these guys are. This is great. I can't believe that. I don't even know what I'm talking about. I'm just full of doom and gloom, aren't I? I mean, the markets are great. We're not in a recession. Everything's hunky-dory. I don't think so. We have an inverted yield curve from the 10-year Treasury that's over 500 days inverted. And the last 3 times in history, at least in current history that happened, was 1929, 1974, and 2008. Every one of those times we were in a recession. And frankly, folks, it is looking a lot worse. Well, let's go even further into this. China ramps up de-dollarization efforts by dumping a record amount of U.S. bonds. All right. China sold a record $53.3 billion worth of treasuries and agency bonds in the first quarter, Bloomberg reported. That's the first quarter of 2024. That is a lot of bonds gone. That's money that's all coming back to the U.S. It previously unloaded U.S. debt to prop up the yuan, which has again grown weak against rallying dollar. The country is piling into gold, which now makes up the highest share of its reserves since 2015. Now, mind you, China, amongst other countries, has been buying gold at a feverish pace over the last 2 years. In fact, each year, I believe, hitting a record high over the previous year. But mind you, they've been buying gold for their central banks since 2012, as far as I can look back. They knew this day was coming. And remember, China plays the long game on this. And what's happening over here in the United States? Well, check this out. America's bonds are getting harder to sell. A series of weak auctions for U.S. Treasuries are stoking investors' concern that markets will struggle to absorb the incoming rush of government debt. A sell-off sparked by a hotter-than-expected inflation report intensified this past week after lackluster demand for a $39 billion sale of 10-year Treasuries. Investors also showed tepid interest in auctions for 3-year and 30-year Treasuries. Folks, these treasuries are becoming toxic, and any chance that China, for example, has a chance to get rid of these treasuries and help, one, stabilize their currency, but two, buy physical gold to put in their coffers, they're going to take all that opportunity. And if you look at the charts, you can see that they've been selling treasuries left and right and really increasing the pace. That tells you we're probably going to see some future problems in the bond market. And right now, the bond market is still very unstable, so it's something definitely worth keeping an eye on. And listen, I'm not the only one saying this. There's other people out there that have this opinion. Look over here, we have Michael Burry, and who was famous for The Big Short. He's the one that predicted the housing collapse in 2008 and invested heavily and won big time. Well, this headline says, Big Short investor Michael Burry just made a big bet on gold and dumped tech giants Alphabet and Amazon. We'll go down here. And it says, according to the filing with the Securities and Exchange Commission, Burry's company, Scion Asset Management, made quite a few adjustments to its portfolio in Q1 of 2024. Among Burry's notable moves were selling his stakes in Amazon and Alphabet and increasing his holdings of Chinese companies JD.com and Alibaba. Burry also made a substantial bet on gold by purchasing 440,729 shares of Sprott Physical Gold Trust, valued at $7.6 million at the end of Q1, making it the fifth largest position in his portfolio. The closed-end fund's official website says it holds substantially all of its assets in physical gold bullion. Now, remember, this guy was early on his call to the housing market collapse. And he was early by maybe 2 or 3 years, if I remember correctly. And he was constantly ridiculed, and his investors wanted to pull out of their investment with him. And he had to put up with a lot of that. And it turned out he was right. Now, does that mean he's right this time? Maybe, maybe not. But for someone to put $7.6 million of their investment, making it their fifth largest position in their portfolio, I'd say that's more than just a hunch or a guess. And we can also go over here to this Twitter X post of VBL's Ghost. China isn't buying gold this month. Maybe they have enough. Saudi Arabia joins BIS CBDC project Enbridge as a full participant. The Saudi Central Bank joins the central banks of China, Thailand, Hong Kong, and United Arab Emirates in this project. Now, Enbridge is basically a participation of some of the Asian countries to more or less do trade with their own currencies and get around the US dollar. This is also Saudi Arabia getting off the petrodollar agreement, which my understanding, that petrodollar agreement becomes inactive on the 9th, which in this recording is tomorrow. And that means that they don't have to use petrodollars in transactions with other countries when they're selling their oil or buying other assets or commodities. So put all these things together. What do you think? I'll tell you my personal opinion. I am going to continue to buy gold and silver, and specifically silver, because frankly, it's just a better deal. It's a best price value asset right now. And I think that with the current spread of about 74, 75 to 1 gold to silver ratio, that should tighten up as we see prices continue to increase over time. So this is my opinion on the matter. Tell me what you think. Leave me some comments. Let me know what you think about what's going on here. Also, please like and subscribe, and if you like the information of this video, and feel free to check back with us as we'll have more videos talking about what's going on in the market, because I think things are about to continue to get spicier and spicier as we move forward into the summer. All right, till then, thanks for checking us out, and we will see you soon.